What's up, YouTube? Welcome back to the Wallet Monkey channel, where we give you all the credit intel you need to grow your wallet. Today, what I wanted to discuss and talk about is all the mistakes that I made trying to rebuild my credit, right? As you guys have been following along, I went from a 460 to 760 credit score on the road to 800, right? That's one of my personal goals. Now, I don't know if I'll ever get there. I don't know if I actually care. I like setting goals like that, right? When we set a goals, we tend to achieve it more, right? We're constantly running polls on this channel. And one of the big things that I know a lot of people are still focused on is rebuilding credit. Now, I think I'm a poster boy example of this because I think I did everything wrong in the beginning. Again, I was working off of limited education, information, and because of that, some of the decisions that I made, I feel like were very stupid and bad, right? I wasted time, I spun my wheels, and instead of getting through this quickly and getting past the pain, I just was basking in it and making it longer, more drawn out than it needed to be, right? So let's talk about these things, just a few, and I'd love if you are following along, right, and you've got something that you've made as a mistake and it's not covered in my list, share it in the comments below. All right, so let's dive in. First things first. The first thing I did was I focused on crappy credit cards. Because when you're in the subprime category, 460, 500s, you got derogatories, you got baddies, what are your options? Who is really extending credit to you at that point, right? So this is like Credit Ones, this is the Indigo cards, this is all the borderline predatory offers that you see on Credit Karma and Wallet Hub. Like when you're not getting any offers from like normal, legitimate credit card companies, that's the crap that shows up at the bottom. And those are all subprime cards, right? Now, thankfully, I didn't fall into that trap. I almost pulled the trigger several times, you have no idea. But when you're looking at a card that's gonna have maybe a credit line of $250, $500 if you're lucky, and it's got a $100 annual fee and there's all these other fees associated with it, it's like there's no point in getting it. Going out and getting crappy cards. I went out and I got two CapitalOne cards. One I think had a $200 limit, one had a $300 limit. So that was the first mistake. Second mistake is along a similar vein as that, is I went out and got all these online trade lines. So a trade line is different than a credit card. You get no card and it's used, you can only use it at this one domain, this one store or shop. And a lot of these have overpriced, marked up junk that you have to buy in order to open up the account and, you know, get them to start reporting to the credit bureaus, right? So this is My Jeweler Club I went and got, New Coast Direct, and a couple others, right? And I don't even think My Jeweler Club is around anymore. And at this point, all of these were reporting to all the major agencies still, right? So I got lucky on that front. And it did help my score, right? Because every time that we add a new credit, it does ding us because it takes down our average age of account, but at the same time, simultaneously, it is stretching out the amount of available credit we've got, so it makes our utilization look better. And utilization, I'm telling you, is the #1 credit killer. We shot a video on this. We'll try and link the card right here. And so you need to pay more attention to the utilization. And so anyways, that brings me into the third point here, which is I was focused on, instead of keeping my utilization down, I was focused on just using those cards as if they were free money. Now, this is a huge mistake a lot of people make. And I think, again, this comes with education. But when you're treating this like free money, you will treat it very poorly. You're going to not take the payment dates serious enough. If you don't have the money, you're just gonna say, oh, well, you're gonna continually use way too much of the utilization and max out the card, not pay it down, because again, this is free money. There's no accountability there within what you're doing, right? So that was a huge problem that I had in the beginning as well. Next, I was very hyper-focused on removing baddies, derogatories, bad things on my account versus just establishing great relationships and transactional history with banks that I actually liked. I spent all this time, money, thousands of dollars, hiring, credit repair agencies and individual guys and friends of friends of friends, all taking me for a different kind of ride. And trying to get all those things removed took over a year. And we got a lot of them removed, but at the end, there was still the bankruptcy. At the end, there were still some of the larger charge-offs. So what was the point? And if I would have dedicated, I argue, if I would have dedicated that same time to building out relationships with institutions, transactional history, getting into a bunch of their different products, and at minimum, a secured credit card, and just let that sit for somewhere between 2 to 6 months, I argue I would have been much better off. And now seeing a lot of the personal stories shared in the community, I know I would have been better off. So that was a massive mistake on my part. And I know that there's a ton of people right now, some of you probably watching this, that are going out trying to completely remove and scrub the credit profile clean before and they think that by getting rid of all of this, now I'm gonna get this huge uptick of a credit score. And you don't. You really don't. It makes your approval odds better when you're down in the dumps, like sub 600. It does help with that. Again, I would argue that at that time, we should not be trying to get new credit. We should be building relationships, opening up high yield savings account with whether it's Amex, Chase, Navy Fed, whatever credit union you want to work with, or major banking institution, right? That would be more worthwhile. That money that I took for credit repair, if I would have just sunk that into secured credit cards, savings accounts, relationships at these institutions, I would have been better off. I know that. Next, I was focused on and constantly watching videos trying to learn like hacks and tips on, people who won't do a hard pull and a way to sneak in here. And so it turned into this thing to where it's like you find yourself spending all this time and acquiring these cards with the shopping cart trick, with all these other tricks and hacks, right? First off, you don't even want the card, but you're filling up your profile with a bunch of junk. So you're thinning out your average age of account. You're adding too many new accounts, too many new inquiries, because a lot of times the soft pull trick hack thing ends up hard pulling you anyways. Yeah, you got approved, but it was for $200, $500, etc. So again, I would argue that that's not worthwhile. So you see, like what we've now been covering on this channel over the last, year is the same stuff. And we're just kind of talking about it in different ways. And I'm talking about the personal mistakes that I made and the things that slowed me down, because I want you to go through this faster than I did. I think an 8 to 10 month window is the perfect amount of time that you need to completely change, fix, reshape your credit profile. Okay, so that's all I got for you. So what I'd love to hear from you in the comment section is, what did I miss, right? Is there other things that you fell into, other traps that you fell into that you think would benefit others? Comment below and we'll pin that, or we'll interact with it so that more people will see it. And if you like this or just want to help us get higher up in algorithms, then take a second, click the like button. And if you're brand new here and you like this sort of thing, stick around, hit the subscribe button, the bell notification, turn it to all, be on the lookout, more videos coming soon. See ya.